In this video, we're going to briefly talk about responsibility accounting and introduce the idea of a responsibility center. So what is responsibility accounting? So responsibility accounting refers to managers being held responsible for those items and only those items, that's a key word there, and only those items that the manager can actually control to a significant extent. So this is basically holding managers accountable only for those things that they have control over. So a responsibility center is used for any part of an organization where a manager has control over and is accountable for cost, profit, or investments. So with responsibility centers, we can break those down into three kinds of responsibility centers: a cost center, a profit center, and an investment center. A cost center is a segment whose manager has control over costs, but not over revenues or investment funds. So in a cost center, the manager has control over costs. In a profit center, this refers to a segment where the manager has control over both costs and revenues, but does not have control over investment funds. Okay, so cost center, the manager just has responsibility and responsibility over costs. Profit center, the manager will have responsibility for costs and revenues. But an investment center, this is a segment where the manager has control over costs, revenues, and investment funds. So this is a center that can actually invest in operating assets. So you can think of a cost center, the head of HR, for example. The HR department doesn't generate any revenue, does it? It just has control over what it spends. Profit center actually generates revenue as well. So you can think of a specific sales manager, for example, or production manager, even if they're working together. That might be more related to a profit center, where an investment center looks more of a bird's eye view, where we have control over all of those items. So in the videos to come, we'll look at different ways in which managers can be evaluated on their performance, as well as how a company can be evaluated overall. I'm going to pause here, and then in the next video, we'll start our discussion of ROI and eventually residual income.